All right, so let's dive in. This time we're tackling a question that's probably on a lot of minds. Uh, Nvidia versus Newmont.
Hmm.
Where should you be putting your money in 2025?
That's a great question and definitely a timely one,
Right.
especially with all the shifts we've seen in the market lately.
Remember how Nvidia was one of the top performers in the S&P 500 just last year? But now, those magnificent seven tech giants are facing some pretty serious headwinds.
Yeah,
You gave me this whole stack of articles and reports, even some YouTube videos,
right.
and it seems like they're all pointing towards a turning point.
You're right. There's a definite shift in sentiment.
Yeah.
One article I saw from Prime Capital Financial is the tech bubble about to burst. Really lays out these concerns,
Uh-huh.
increased regulatory scrutiny, geopolitical tensions. We're even hearing whispers of a tech bubble burst that's similar to the dot-com era, and it's making investors nervous.
Yeah, I remember watching that 2 cents video about the dot-com bubble. It's a stark reminder that explosive growth doesn't always translate to long-term success.
Right.
But what's interesting is that even with those warning signs, everybody was still pouring money into AI in 2024.
Yeah.
And Nvidia was riding that wave.
Yeah.
So is the AI craze finally cooling down?
Well, the question is all the AI hype justified?
Right.
I mean, we're seeing these incredible breakthroughs, but there's also a lot of uncertainty.
Hmm.
Remember that Big Think video where the expert argued that the real value might be in predictive AI
Yeah.
and not these flashy AI chatbots that everyone's obsessed with?
Okay.
Things like fraud detection or optimizing logistics, less hype, but maybe more practical impact.
That's a good point. And speaking of practicality, what about all the money that's being poured into AI infrastructure?
Oh, yeah.
We're talking billions of dollars from these companies like Meta and Amazon having
Yeah.
these huge data centers. Is that investment actually going to pay off?
That's where things get really interesting. Remember DeepSeek,
Oh, yeah.
the Chinese AI startup?
The one that sent shockwaves through the market and caused Nvidia's stock to just plummet?
Exactly. The LLMs, DeepSeek, and the Magnificent Seven analysis that we have shows they're achieving results that are comparable to US AI models, but at a fraction of the cost.
Wow.
Suddenly, those massive data centers seem a little less essential,
Right.
especially when you consider Nvidia lost $593 billion in market cap in a single day,
Huge.
the largest single-day loss in US history.
That's mind-blowing. And then there's versus AI with their active inference AI.
Right.
They challenged OpenAI to a game of Mastermind.
Yeah.
And get this, their Genius platform solved it 140 times faster and over 5,000 times cheaper, all running on a simple MacBook.
Wow.
It makes you wonder about the future of those huge data center investments.
Absolutely. What's fascinating here is that it challenges the assumption that bigger is always better in AI.
Hmm.
Maybe efficiency and adaptability are the real keys to success.
Right.
And if that's the case, companies like Nvidia, who are heavily invested in those massive systems, could be in for a rush ride.
So with all of these headwinds hitting big tech, where should investors be looking in 2025? One name keeps popping up in our sources.
Yeah.
Newmont, the gold-producing giant.
Right.
Remember that point XGen investor made?
Mm.
While the tech world is chasing AI dreams, Newmont is quietly generating cash flow. It's
Yeah.
like a whole different world.
It's almost a back to basics approach. And
Hmm.
with all this uncertainty in the market, gold's appeal as a safe haven asset is definitely increasing. Remember, CBS News had an article, 3 signs it's not too late to invest in gold. Seems pretty relevant right now.
Yeah, especially with all those inflationary pressures
Yeah.
still looming.
Right.
So could Newmont be a safer bet for 2025 than a tech giant like Nvidia?
Well, let's dig into that. Nvidia is known for innovation,
Yeah.
but their 2025 annual report highlights some serious risks.
Hmm.
They're heavily reliant on global supply chains,
Okay.
and those export controls, particularly regarding China, are getting tighter. This could create vulnerabilities that impact their future growth.
Okay, so we've got a tech innovator facing some pretty serious challenges versus a steady gold producer with a history of weathering economic storms.
Right.
Where do we go from here?
Let's take a closer look at both companies head-to-head and see what we can uncover. Let's start with Nvidia. Their annual report actually paints a pretty impressive picture of their full-stack computing infrastructure.
Okay.
They're not just making chips. They're involved in everything from software to autonomous driving systems. It's clear they're not afraid to innovate.
Yeah, that's true. They've been pioneers in so many areas, and their latest financial report shows they're in a really strong position.
Hmm.
Billions in cash. They're actively buying back shares. It seems like they have the resources to navigate those headwinds.
Yeah.
So why are some investors hesitant?
Well, those export controls are a big wild card.
Right.
If China clamps down further, it could significantly limit Nvidia's access to a key market.
Hmm.
And remember DeepSeek,
Right.
their success suggests that the future of AI might not depend on those massive, expensive systems that Nvidia specializes in.
Hmm.
What if those billions invested in data centers become obsolete?
Right.
That's a risk investors have to consider.
Okay. I'm starting to see why Newmont might be appealing in this environment.
Yeah,
They're just digging up gold, selling it, and generating profit.
exactly.
No geopolitical dramas,
Right.
no worries about their billion-dollar infrastructure becoming a white elephant.
Exactly. And that simplicity can be very attractive, especially when the market is volatile.
Right.
Remember, we've seen this pattern before.
Hmm.
After years of chasing high-growth tech stocks, investors start to prioritize stability and tangible assets. We could be entering that phase now.
So is it a safe bet to say Newmont is the winner here?
Not so fast.
Okay.
We need to look at the bigger picture.
Okay.
Yes, Newmont has a solid track record,
Hmm.
and gold is seen as a safe haven, but they're not without risks.
Right.
Gold prices can fluctuate, and
Right.
their production costs can impact profitability.
That's a fair point, but even with those risks, they seem to be in a much stronger position than Nvidia right now. Wouldn't you say, especially with all those uncertainties looming over the tech sector?
I think it's more nuanced than that.
Oh.
Remember, Nvidia still has a lot going for it.
Hmm.
They're leaders in a rapidly growing field,
Yeah.
and if they can navigate those challenges, the potential rewards could be huge. But you're right, those risks are real. And
Yeah.
for investors seeking stability and consistent returns, Newmont might be the more attractive option in 2025.
Okay, so we're not declaring a clear winner, but
Yeah.
it sounds like you're leaning towards Newmont.
Let's put it this way. I'm definitely more bullish on gold than on tech in the current environment.
Okay.
But remember, this is just our analysis.
Right.
Every investor has to make their own decisions based on their individual circumstances and risk tolerance.
All right, so no crystal ball predictions.
Yeah.
But you've definitely given us a lot to think about. Should we unpack some of the specific factors that investors should consider when weighing Nvidia against Newmont?
Absolutely. Let's delve into some of those key details that could sway the decision one way or the other.
So where do we begin? What should investors be thinking about when making this decision?
Well, let's start with valuation. Nvidia's price-to-earnings ratio is currently around 47. That's pretty high, especially compared to the semiconductor industry average.
Okay, so that means investors are expecting a lot of growth from Nvidia, but as we've discussed, there's a lot of uncertainty about whether they can actually deliver on those expectations.
Exactly, and remember that Nanalyze video, the ultimate NVIDIA valuation guide.
Yeah.
They explained that while a high PE ratio isn't inherently bad, it does mean there's more room for the stock to fall if those growth expectations aren't met.
And if that happens, it could have ripple effect through the entire market, right? I'm remembering that article, Tech Correction, Market Impact and Index Fund Vulnerability.
Right.
It wasn't exactly a rosy picture.
You're right, that article highlighted how much of the S&P 500's value is tied up in tech stocks. If those magnificent sevens start to tumble, it could drag the whole market down with them.
That's a sobering thought, especially for folks who are heavily invested in index funds.
Absolutely. Diversification is more important than ever. Having some exposure to safe haven assets like gold could provide a buffer during a tech downturn.
Okay, that makes sense. So let's look at Newmont from a valuation perspective. How do they stack up?
Well, their price-to-earnings ratio is much lower than Nvidia's, closer to the market average. That suggests they're less vulnerable to a sudden drop in price, even if gold prices fluctuate. Plus, their latest financial reports show strong cash flow, and they're continuing to invest in exploration and development.
So they're not just sitting on a pile of gold. They're actively working to increase their production and profitability. That's a good sign.
And remember, they have less exposure to those geopolitical risks that are weighing on tech companies. They operate mines in various countries, so they're not as reliant on any single market.
So in a world where uncertainty is the only constant, Newmont's stability and consistent cash flow starts to look very appealing.
Especially for investors who are looking to protect their capital and generate steady returns in potentially turbulent times.
Okay, so we've covered a lot of ground here. We've explored the headwinds facing big tech, the emergence of AI disruptors, and the allure of gold as a safe haven. We look at Nvidia and Newmont head-to-head, weighed their risks and potential rewards.
And what's become clear is that the investment landscape is shifting. What worked in 2024 might not be the winning strategy for 2025.
So as we wrap up this deep dive, what's the key takeaway for our listeners? What should they be thinking about as they make their investment decisions for 2025?
I think the most important thing is to stay informed and be adaptable. Don't get caught up in the hype, whether it's around AI or any other hot trend. Do your research, understand the risks, and consider what's right for your individual circumstances.
And maybe take a closer look at those companies that are quietly generating cash flow, like Newmont. They
Right.
might not be as exciting as the latest tech gadget, but they could offer the stability and security you need in a volatile market.
Absolutely. Sometimes the best investments are the ones that fly under the radar.
So should investors abandon those LLM powerhouses and head to the shores of Newmont in 2025?
That's a decision each listener has to make for themselves. There's no one-size-fits-all answer.
But what's clear is that the investment landscape is changing, and those who stay informed and adapt their strategies will be the ones who come out ahead.
And remember, this is just the beginning of your investment journey. Keep learning, keep exploring, and never stop seeking those golden opportunities.
Well said, and a big thank you to Steve Barton for suggesting this fascinating deep dive. It's given us all a lot to think about.
Indeed, it's always a pleasure to delve into these complex topics and help listeners navigate the ever-changing world of investing.
And to our listeners, thank you for joining us on this deep dive. We hope you found it insightful and helpful as you make your investment decisions.
Remember, this deep dive was for informational purposes only and does not constitute financial advice.
Be sure to do your own research and consult with a financial professional before making any investment decisions.
Until next time, happy investing.